do. Alrighty, Doc here from North America. It's a good morning, good afternoon, and a good evening. That's what it is. And we are on Thursday, so our U.S. shortened week feels awful good. 4-day week sounds like fun to me. Alright, let's check out where we're at. Christine Lagarde, head of the ECB now, she said that they're going to taper. I think that she's been talking to Draghi. Draghi said stuff like that all the time, and he really shook the markets beautifully in his favor without having to put up much money to do anything. In the end result, he didn't do anything at all. But it was always amazing, at least if you on the socialist side of economics or politics, all you have to do is say that you care, and that's all that really matters in the end. And then sooner or later the bill comes in. It's like being at a dinner at a restaurant, and you just keep on ordering, and then finally at the end it's like, oh, but we really don't have the money. Oh, but it's been fun for the last 3 hours. All right, so we saw a great move across the whole planet. I mean, everything leaped up because, well, the ECB is going to slow down on its tapering. So 17 trillion will turn into, what, 15 trillion? I don't think so. I think it'll just stay the same. They're just going to slow down. So instead of buying, $60 billion worth of euro assets every month, they will buy maybe 55 billion every month. Oh my God. The whole world is upside down from this QE stuff. All right, let's see who is on the chat line. Is anybody there? Are we there now? Let's take a peek and see and open up the chat line. Are we there yet? And we open up Dukascopy's on the web and on the YouTube, and the answer to the question is I see nobody asking a question, so I'll just keep on rambling like I usually do about the reality of the markets, not the pretend of the markets like, CNBC or Bloomberg or stuff like that, or even the Fox News. Now, Fox Business is outstanding, without a doubt. We have, at least we have one conduit that actually speaks about the truth all the time, which is kind of nice. But after that, all the other financial networks make no sense whatsoever. Let's see, where are we at this point in time? And believe me, I've been watching them and been on them for many decades. So what we see here this morning as we, what do we got there? That is that's red wheat. That's right, we want to go to, and there it is. There is the Swiss. And let's widen that out even a little bit. See how it hit the channel and stopped. That's curious. And you can see a little aiming down here at the moment, right there in the daily. The weekly is aiming down a little bit. I went into the weekly last week and we had that strength right there. And then you can see same thing here on J4X, same thing. We have the hinky ashies are green for 3 days now. And we have the white line piercing for, I think that's 4 days. Is that 4 days? Maybe it is. Right there, or close to it. 3.5 days, that type of thing. So we're seeing the buying of other pairs, and we're seeing the selling of the dollar, and it's rampant across the whole planet because we've seen everything switch directions. Before the ECB made their announcement that they are hoping and wishing and would like to stop their tapering, and they're going to try to do this. They said it, they're going to do it. It'll be, I call it the Draghi rule. When in doubt, say what they want you to say. You just don't have to do it. Except for what was always interesting about Draghi is his son was trading on the news. So that was pretty cool. They were enhancing their family wealth through their son. And has anybody seen anything about that? I doubt it. I mean, people will go, what? What are you talking about? Draghi's son front-running markets. Who says that stuff? It's the truth, but I'm sure that it's not going to be talked about. But yeah, so I mean, Christine, who knows? Christine might be, maybe her daughter or son is front-running for her. I mean, isn't she wanted in France or something like that? Isn't she like under indictment in Europe somewhere? and she has, but they still make her a leader in like, what was it, in an IMF, was it the IMF she was ahead of, or World Bank? And now she's and then she lost her job in France. Like, I don't think she can stand for elections in France or something like that. I don't know. I mean, you can't make this stuff up. It's amazing. I mean, you can't say that stuff if it isn't real. Well, you could, but it's true. All right, a sip of water. That was good. All right, so we're looking at the dollar being pushed down a little bit at the moment. We'll see how well this lasts for the next, 8 trading hours or so. See how that holds up. I don't have any confidence whatsoever. These markets are controlled by one thing and only one thing, and that is the U.S. Federal Reserve. So if they want to make it look like it means something, then don't fight the Fed. As traders for the last 50, 60, 70 years, they've always said, don't fight the Fed. And my 40 some odd years, I've learned, don't fight the Fed. So if the markets are moving down from being up in the currency pairs, it's because that's what the Fed wants. And you can see over here on the stock indices, you can see how they acted from it all. Let's go over to that. Here's the S&P 500. I guess a Dow would be the best to start off with. There's the Dow. So here's where the news comes out. Where's it at? Right, I guess that's right there? No. Let's see, it was right here. I think that's where the news came out, right there. And so they took the Dow Jones Industrial Average up, what is that, almost 50 points. The NASDAQ, you can see right here, same situation, same time. She makes the announcement, and it goes up like 65 points. Just a nice run there, trying to say, hey, what she said is very positive for the future of the next 10 minutes or an hour or whatever. And that's what it is. And then you can see the grand of them all, that's the S&P 500 that the whole planet trades. You know, right there, Christine says, we're going to taper. And the thing explodes in a matter of, what's that, 5 minutes, 7 minutes, 8 minutes? It just takes off, just explodes right up. So it goes from the 4,499 right there to the 4,512. That's like a 120 point move on the Dow Jones Industrial Average. So, and all our currencies did the same exact thing. Same thing. They made a nice dash. So, all right, let's get back to the currencies. And like we've seen before, right there, you can see that the dollar is going down in value. They're selling it, but notice, look at the tail now on this candle here. Like I said, we'll wait and see. By the end of the trading day, they'll probably be dancing on the green line or something like that. Now, when we switch over to the euro, there's the euro. You can see same situation. It had popped up. You can see there's a nice big tail now on this candle right there. But we're still in a daily sell and a weekly buy. So this thing's stuck in a neutral. And you can see how tight the channel is. We are trapped between these two dotted lines that has been going on for, we got it the wrong way. You can see this has been going on for over a year. We've been trapped in that universe. See where it just kind of moseys along in that area back in July of 2020. It goes zippity-doo up to there, and then it goes here. That's the math, so forget that. And it bounces off of it, and so we've been, for a whole year, we've been just trapped in that zone. And we're assuming the only reason it adjusts now is because of the inflation. Money isn't adjusting for the inflation. There's the cable. Oh, let's go check it out first. Let's go check out Euro on J4X too. See what's going on there. I like to always try to confirm how good the two work together. Let's see, Euro, right there. There it is. And there's the Euro. And the Euro is trying to, hold its own. I guess you can see the hinky ashies are red for the last couple of days. It's not, picking up that sensitivity at the moment. Let me just slide back over to the euro on the Chicago side of it, right there. And let's widen that out like so. As you can see, we got that little strength thing going on at the moment. It's just is what it is, and we don't even know even if there's a bank that cares about it on the planet. All we do know is that the central banks care about it, and that's where our world is, traders. It's the central banks are nothing at this point, because they can go and buy whatever anybody sells, and there's nobody for them to answer to but the politicians. And do the politicians care? I mean, you can see what we're trying to do in the United States. The literally split government is trying to pass a $5 trillion package, which they named it the 3.5, but it's $5 trillion package. So they don't want to spend 3.5, they want to spend $5 trillion. They want new spending of $5 trillion. And they labeled the bill the $3.5 trillion package. Oh my God, you can't make this stuff up. It's incredible. It's incredible. I just laugh at it. I wish the days of the trading floors, see, that's the problem too. There are no trading floors anymore. There's no opposition to this stuff. It's all Federal Reserve. It's all central bank. That's all it is at this point. Individual money just rides the pony. That's all it does. Individual money and funds, mutual funds and hedge funds and so forth, they just ride the pony, and the pony is the central bank. That's right. Wherever the pony wants to go, they ride it. All right. So there it is. You can see that. There's the euro. Let's check out cable. See what the cable's doing. I noticed that cable was a little bit weaker than the other two, which was interesting. Especially through the eyes of the Chicago quant. You can see there. JForex is reflecting it very clearly. See that there? See, it's not even making an attempt to go up. Even when the Hinky did. Look at that. The Hinky is showing life, whereas in the euro, the Hinky is not reflecting that strength yet. See, right there. It's still not reflecting it. Like as if, oh, are we up? Is that what it's saying? The Hinky's going, are we up? But you can see here the stochastics battling with each other, the fast versus the slow. You see, they're like also saying the same thing. It's like, what? You mean the euro? We're buying euros now? No. And then you can see here, the British pound is trying, but you can see how weak it is also. And there's no enthusiasm there. There's no conviction, as we used to say on the trading floors. It just is playing with the Bollinger Band. This one has the Bollinger Band on it because someone asked for it many months ago. I just leave it up there. I find it fascinating. And you can see our time manifolds, how our time manifolds are so much more touchy-feely to it, which is kind of cool. You can see we start to rise. This thing is still colliding down, and then it starts to rise. It's a laggard to our mathematics. Ours tops out here. This kind of cruises along a little bit longer, and then finally a day or two later starts to break down. And in this case here, you can see this thing is trying to rise, and our math is going, it's yawning and saying, no, we don't see anything there. No real action. So that is where we are with these products at the moment. They are just not making that same, I guess you could say, analysis or interpretation. I haven't even seen lately what the ECB has. The last I saw was they had 17 trillion, not billion or million, but 17 trillion in negative return. So in other words, the European Union has 17 trillion euros of assets losing money on every transaction. It's owned by the ECB or something like that, or it's floated by the local governments themselves, Germany or Italy or Greece or whatever, floating bonds, and you have to pay to own those bonds. Now there are some longer term ones that are actually showing some life in them, but overall bonds are minus throughout Europe, and they've been buying the corporates, and they've been buying the lower caliber assets just to make sure, because no one else will buy them, let's put it that way. No one else will buy them at minus, so it's only the central banks and the governments that will buy this stuff at that minus, or sell it to some fool that has to make sure that they have assets the next morning, guaranteed. All right, now what really has caught my eye more than any of these other dances, because like I said, it looks like a play from the Draghi era. But what's curious is the Turkish Lira. That spike that we had in the Euro Turkish Lira is coming to fruition. You can see here, yesterday it's still lifting. You can see the weekly is still climbing. And something's going on where it's falling against the dollar out of nowhere. Whereas the others are just not that aggressive. Let's take a look at it on the J4X. And then I'm going to show you that wild spike that occurred in the in the Euro Turkish Lira, which I found very fascinating. It seems like we are coming to close that gap in some aspect, which is unique. It is unique in the sense of, I guess it wasn't a mistake. It was when the markets were incredibly thin on Monday because of the U.S. being closed, and somebody at the Federal Reserve wasn't paying attention, obviously. They were out at their barbecue, enjoying Labor Day. They spiked the Turkish Lira. And at first I said this, a few people here, I said, is that a bad tick, or is that real, or what is that? And I didn't really go and look at it, through time and sales. I just left it as is. But now we find right here, you find on, the Chicago Quant right there, lifting. You see it here on the J4X, lifting. So obviously, now it's not reflected here. That's where it happened on that day. So it didn't affect on the dollar, but somebody in the European Union decided to not pay attention at the ECB. And I'm going to show you right now what we're talking about here. And that is it's wrong direction. There it is. And that is Euro Turkish Lira. See, look at that. Let's see, where's it at? Let's see if we see the spike on the J4X too. Or is it an American manifestation? So it was here. Is it right there? And it doesn't reflect it. Now, look at what it does when I put it up on here. Somehow or another, in American trading, through the brokerages here, they spiked it. And I would have assumed it was what they refer to as a fat finger, like an error. But no, I think that was real. I do think it was real. I guess there was nobody there at the time to stop it from doing that. And look at that. The strength started 2 days beforehand. We started getting a volatility signal. The next day we got it closing the buy. Okay, and that was pretty aggressive. Look at that. The way it was closing the buy with a nice little spike. The next day it's our 3-day weekend. And on Monday, when no one's paying attention, I mean, like, someone stepped up to buy and found out you can't buy with a market order, and they paid a high price. Now, if it wasn't for these 2 days right here, I would assume that was a fat finger. But due to the fact that we are now climbing to that price, it tells me that it wasn't a fat finger, it was a buyer. Someone wanted to, buy euros and sell Turkish lira, big time. That was that right there. So the fact that it's almost right to the spot now, it's not that far off from it, tells me not a fat finger, but someone forgot to tell them it was a 3-day holiday in the United States, and so the Federal Reserve wasn't paying attention, and the ECB chose not to pay attention, and someone stepped up and tried to buy, and wow, it showed the illiquidity there. And because these guys here and gals at the central banks, the ECB, the Federal Reserve, the Royal Bank of Scotland, the Royal Bank of, or not the Royal Bank of Australia, the Royal Bank of Canada, their central banks are holding these markets in they control them. They definitely control the markets, all the markets. So that was not a fat finger. Obviously, that's what's going on, and you can see the prelude through our mathematics right there. You can see it was, and we widen that out, you'll see it even clearer. You can see someone was starting to step up. First of all, you can see the incline of the weekly. It was, here the price itself action is falling down, but what's Doc's math doing? It's rising. It's rising towards the time manifold. It's saying there's buyers there. There's buyers, and those buyers are outnumbering sellers. That's what it's saying. Now, this is a weekly indicator, so it was building. They were not selling anymore. They had given up on the selling idea of it. So somebody knew it was going on. This was going to come. Then you see this fat finger, which most people would think it was, but why are we there now? You know, why are we up to that point now, today, if it was a fat finger? Because it wasn't. There was an actual buyer out there. The math was picking it up. And then this week, you see here on Friday, you know, the close there, you know, it's there. And then on Monday, you know, you get this, you know, giant spike, and it's on upwardly trajectory, you know, direction itself, like a rocket. And here we are, we're flirting with some type of buy after, how many weeks is it now? We've been in a sell since up in here. And notice that's where they're bringing it too. They're bringing this move into that direction where we went into the sell up in there. This thing is climbing back up towards it. So our math has been saying, you know, be long, you be wrong for all these weeks. You know, it's like 2, 3, 4, 5, 6, 7, 8, 9. 9 full weeks, and then all of a sudden you saw it here once. So try to do it here a week ahead of time, right? As the price is dropping down, our math picked that up, and sure enough, right there. But did I just blow something up? I think I just did. I think I just moved something in the wrong direction. So what is that? Oh, there it is. It's the time manifold and everything down. So we go back down to there, and then we got to move that down one more time. Let me just where's that at? I think I go like that. Double click it. And then go to properties. Where is that at? I accidentally dragged it up top. Properties. And put it to the bottom. There we go. So it's reading it. My math is ahead of the curve like usual. And, you know, it's reading it. It knows that the buyers are coming in. You can see how it lifts up. And the following week, look at that. The strength kicks right out. You know, it's it always amazes me. I've been watching my math now for 40 some odd years, back tested 37 million years on expanding galaxies, the thermodynamic expansion on a beginning galaxy, looking back 37 million years, and then using it on isotopes, and then using it on actual, what we refer to as friction universe, or a friction world, that is looking at moving objects every day in many different categories, and here we are looking at it at the euro against Turkish Lira, and I look at it through the you know, the S&P 500, and I look at it through the Dow Jones Industrial Average, and I look at it through the British Pound. I look at many different objects that are moving on a graph, and put the math to it, and what it does, it gives us a good idea where things want to go before they get there, which leaves an incredible question is, how does it know? And I don't have an answer for you. It just does. The math reads moving objects on surfaces, and it's reading a concept that is not in the math books. It's something I invented. But anyway, that's where we are. Was not a fat finger. Not a fat finger. Obviously not. Now, if it had traded like, you know, down here, and never, this yesterday hadn't happened and today hadn't happened, I would be like, oh yeah, that was a fat finger, that was a mistake. It was no mistake. There's a buyer that's out there. And the weekly has been reflecting it. And the daily is reflecting it. And now the price is reflecting it. How's that? Does that make any sense to any of you? I hope so. Or am I just in I might be just in a nursing home having an illusion. Like the whole world is just a snow globe to me or something. Who knows? You know, am I real or am I Memorex? You know, is it me? Am I just talking to myself maybe? Who knows? Reality is a funny thing, isn't it? All right, so that is the Turkish Lira on a euro, and we've talked about this too, traders, or I might be talking to my nurse and I don't realize it. Basically, my caregiver. Maybe the math is trying to tell us something here, as usual. All right, now let's, and you know, and as I was trying to finish off in my head, and I forgot because I got lost there, and that is, this Euro-Turkish Lira really gives a great insight to where the market is going. Well, much better than the dollar Turkish Lira pairs trade. It is truly a much better indicator of future events in the Turkish Lira in general. So that's pretty cool. All right. now we zip to, where do we go from there? Canadian, that's right. We'll go take a look at the Canada. And there's the Canadian, a couple days in a buy. You see it here. The weekly is it's been in a weekly for a while. Been in a weekly since here. So how many weeks is that? I think it's on the fact check spreadsheet. Let's go over to the fact check spreadsheet. Where is that mouse? There we go. Here comes the fact check spreadsheet. There we go. See if I can move that. There we are. And you can see on the Canadian, what is that? That is $13 weeks in a buy. It's been riding up, which is kind of curious. The election is on at the moment. Oh, I mentioned it yesterday. There's a group started throwing stones at Trudeau. Actual physical stones. Wow, that could be painful on the campaign trail. So the Canadians holding up really, it's losing value against the dollar, basically. That's what it comes down to. Since we've gone into the weekly buy, the Canadians going from the 120-ish area, 121-ish area. What we got there? There's a low of 120.71, all the way up to right there, like 5 weeks later, went to 128 and change. Wow, that's pretty aggressive move. And you can see here this daily action's going on. Obviously shorter cycles, and it's trying. I guess they're trying to flatten out here. Matter of fact, now that we look at this, it kind of reminds me of a Head and Shoulders here. So maybe what it'll do is it'll top out in here, and this is the lines it's been chasing too. Let's see if we can contract that a little bit, and you can see that we've been watching this product just like we do with some of these other products. Trade a range. Let's see, where is it at? Yeah, see, it's become a resistance area since where is that? That's January of last year, January of this year. So 9 months. It runs up to it at times, plays with it a little bit over the top, and then rolls over again. And then is this been in a tight range for a while? Let's see. Let's go over to J4X and put it up on a weekly view of it and see what it looks like there. Dollar Canadian, right there. We'll take a look at it on a day-to-day basis to start off with. The hinkies kind of hide the range, but that's all right. It's insightful. Let's put it that way. So it's important. I don't see much. I mean, I guess there's the 120 area. Was that back in December, right? In November? Where's the date on that? May? So is that May, June, July, September? Okay, so that's this year. And there's the top of the range that's been playing with since, what is that? That's February. Yeah, so it's been around in here. Now, what have they done? Okay, so overall, the Canadians making good money against the dollar. It's just that it's bounced here. That's what it comes down to. But I mean, remember, it ran all the way up into the 40s last year. That was 2 years ago now. That's a big drop. $1.40 and change down to, buck. Didn't even break. It broke into the teens down here. The high teens. I think it was 18 or 19. And that was one heck of a move against the dollar. That was nice. And there you are in there. You can see, it's climbing up again. But that is one heck of a move from. And I remember when it ran to the 140. We can slide back a little bit and take a look at that. But I'll tell you, I was really surprised that it did that to begin with. Let's go. Let's do it. Let's see, what can we do? Let's make this a weekly, and then we'll slide back and take a look at the action there. And there's the Canadian on a week basis on J4X. And they ran it. I mean, it was one heck of a run up. I remember us going in a weekly buy for 20 some odd weeks. It was wild. So this, I guess this is the range since what, 2014, 15? This is the whole range right here, right? So kind of hangs out in the 17, 18 area on the low end of the range, and the tops have been 40s a couple times. Ouch. That's not too bad, I guess, you know. It's a 20 point move, 20 handle move. Interesting how, you know, how it slid. I remember back before, you know, right as quantitative, well, you see here, when quantitative easing started, it was moving down. And once quantitative easing started, it started to move up, then it came back down, tested it, and then took back off again. So, you know, it's, in many ways, looking at the, you know, a product and then looking how it acted after quantitative easing versus before quantitative easing. And you can see here, this is the, where is that? That is the, you know, the second term of Obama. I don't know, that overall it seems to have found itself a range somewhere towards the, well, I guess that was during the Trump years. The whole action here was the Trump years. Right there. And I guess they're going to honor that. The Federal Reserve obviously is going to keep it that way. Remember, there's no currency on this planet, there is no product on this planet that is not controlled by the Federal Reserve. You might not want to believe that, but I don't see any evidence that says that I'm wrong. That's the problem. All right. Now, let's see, where do we go from here? From Canadian, what we do is we look at, you know, this will be very curious. Let's look at we go to energy and metals. So we go to gold, we look at gold, and we look at crude oil, and then we jump back over to the currencies again, over to the South African rand. So let's take a look at the same action. Let's see, how do we do this? I guess what it is my currency up on Chicago Quant probably can give us a, let's see if we can do this, and then contract it. I'd like, oh, okay, so it's just starting off in 2020 there. I guess I have to set back the dates and times. Let's see, make it, oh, I see, I'm just going back 300 bars. How about if I go back? I would like to look at gold and the way the currency has traded against gold. So we're going to make that like, throw another 0 in there. See if it'll give us 3,000 back. There we are. So it's like going back 9 years, 8 years, something like that. Close. Yeah, there we are. Goes back to the same time period. And then let's put on the Chicago J4X, let's put gold in there. And that'll load up and see how that goes. There it is there. And so gold, since back in, let's see, what do we got there? I see. So, let's see, what can we do here? If we take this one and shrink down the indicator on there. Matter of fact, why don't we just grab that indicator and move it for the time being too. There we are. So here is Canadian back in 2010, right before quantitative easing. And let's take a look at gold on J4X. I'm going to do this, move this down a little bit, and look at it the same way. Let's see. Okay, there it is. Right there. You know, in many ways, the Canadian does have the same type of characteristics. See if we can contract that. What is that? That spike there is 2016, and on here that's 2016. There's a spike, so that's trying to match up to that, and look how much higher the gold has run from that. Same thing here. Now that's, what is that? That is 2012-11. And 2012-11 is down in here. So at one point they were not really matching up very well, and it seems like they're doing a pretty good job. You can see the same type of selling on this from that top. Interesting. You know, Canadian and the gold. You know, again, gold is controlled by the the Federal Reserve, so it's it's not much. I mean, they'll do what they want to do. It's just the way it plays. But there's the Canadian all the way back to quantitative easing. And obviously the dollar has been the winner chicken dinner there, huh? Too bad. Now at times you can see the Canadian has played this range in here. But overall, during quantitative easing, it's been a very tough slog, They've beaten up on it. Seems like they're doing that on most of the products at this point. All right, let's widen that back out again, and we'll fix that. But I was curious, to see what the Canadian had done during the quantitative easing era. And we'll go back to just 300 bars again. Where's that 300? There it is. Close. There we are. And that's an interesting insight. To look at the Canadian at the beginning of quantitative easing and then look at it now. Now, looking at gold, you would have assumed, I've said it so many times, I just like one more time, I am amazed that gold is only trading at, $1,800 an ounce. I would have thought, if I had been told, I've said this many times at this webinar, if I had been told what the central banks were going to do, where would I imagine gold be? I'd say, $5,000 with a spike, fat finger type of $10,000 area. I would have thought for sure. For gold to have a problem getting past 2,000 is amazing. That always amazes me. I look at that and I just scratch my head, and all the metals traders feel the same way. They feel that, and who knows? Maybe in some way. In 2010 we saw gold get up to about 2,000, and it fell down to 1,000, lost 50% in value. And then, at the same time, let's put gold up there too. And at the same time, stock markets just climbed, and inflation slowly expanded. Now inflation is just screaming. It's where do we go there? Okay, that's right there. So let's set gold up for you through Chicago. There's there, and there's there. Okay. All right. Now, right there. And there's gold, trading under 1,800. And it does amaze me. It really does. But again, we saw the same thing happen in the 1930s and 40s and 50s. In other words, they controlled the price of gold. The Federal Reserve did, and U.S. government did for decades. And then it was, once they dropped the currency structure, and started allegedly matching it to GDP and debt of each individual country versus backed by gold, that didn't last long. Instead, it bankrupted the world. Yeah, I have to laugh at that one. Because how many times do you hear someone say that the world has been bankrupted? You know, no, they don't tell you that. They won't refer to that. Very few times will they even mention it. But have anybody seen Mark Faber from Boom, Doom, and Gloom? He's saying that it's going to get way more uglier. I don't know. You know, he's got a PhD in economics, and he is an interesting character. There's no doubt about that. But I don't know if there's a... Can it get any stranger? I don't think so. I really don't. I don't think it can get any stranger anymore. I think that at this point we are in uncharted territory. I guess there must be some stories in the 1800s or 1900s, you know, when industrialized nations started to grow and commerce started to develop. I'm sure there is a playbook for this on some level, somewhere along the line, and I'm sure that sooner or later it'll start to get out. You know, how does this all get resolved? You know, will it be? Remember, all these countries to a great extent resolve things through two physical things. One is through delivering gold when they needed to have, I guess, respect for their cash currency, and the other one was have a war. I mean, it was usually one or the other at this point, and someone would go and take the gold from them. That was unfortunately the way it worked. So I don't know if that's, you know, I guess you have to assume that there's going to be some type of economic destruction on some level of the world economy. Somehow it'll change. Does it have to be violent? No, I don't think so. I think it could be, you know, I'm just guessing. But due to the fact that it's a modern era, I'm assuming that, you know, and we have nuclear weapons, you know, it can't really go to any extreme. You know, I guess the word is ancillary. In other words, the smaller partners, you know, might get a little violent, but overall, the bigger countries with the nuclear weapons obviously are not going to be challenged because they got nuclear weapons. So, you know, how this all gets resolved, quantitative easing, I would assume, I think I've mentioned it a few times, over time. In other words, you know, that's why they have these bond portfolios at the central banks now, where they're going to hold, they have, you know, Santander bonds, and they have Citibank bonds, and they have Merrill Lynch bonds, and they have, you know, Lloyd's of London bonds, and they have Deutsche Bank bonds, and they're going to hold on to those bonds for decades upon decades until everything grows out of it, and they somehow or another slowly mutate into a more responsible, I guess that would be the way to look at it, I guess, a more responsible spending and growing policies. I think that's pretty much what it comes down to. It'll take time, and that's why there's the rumors all the time that the central banks, all of them, the Federal Reserve and everybody, have these other bond portfolios, and they don't plan on selling those products for like 50 years and 100 years. In other words, 100 years from now, a Federal Reserve chairman will be like, wow, they'll make an announcement. It'll be identical to the was it the Bank of Scotland about 5-6 months ago, where Bank of Scotland and the population in Scotland were like, why is the Exchequer selling 7% of the Bank of Scotland? How come they have 7% of the stock? And it's like, well, guess what? They have a hell of a lot more than 7% of the stock. And everybody was like stunned. They didn't know what to say. You know, quantitative easing is almost 13 years old at this point, so that means a bunch of people have forgotten all about what's happened. And there's a whole new generation. And they were like, where did they get off selling 7% of the stock of the bank? How did they do that? You know, how did they do that? You know, it's like, how did the Exchequer even own it? You know, you know, and then you know, how long did that last, traders? Do you remember? What did it do? It last 2 days, right? And now no one's talking about it again, except for Doc. I talk about it once in a while, because I think that's a template to the way we're going to grow out of this. Is that 50 years from now or 40 years from now, there'll be an announcement that the Fed chairman of 2080, or something like that, will say, well, today we sold the last of our, Citibank stock. And they'll be like, what? What do you mean you sold the Citibank stock? Yeah, well, we controlled like 70% of the stock, so we've been slowly selling it now for the last 30 years, and now we don't have that position anymore. And they may even make an announcement that they've closed that particular folder. They claim, there's some retirees that come out of the Federal Reserve, and they say that stuff. They say, like, they have balance sheets. They call them balance sheets. They have balance sheets of companies like Lehman bonds and stock, things like that. It's like, what? Or can you imagine how much? I wonder how much they own of Deutsche Bank. I imagine they made the German Republic own most of it, but you got to wonder, how much does the ECB own of Deutsche Bank, and then how much does the Federal Republic of Germany own stock in Deutsche Bank? Deutsche Bank is like Citibank in the United States. Citibank trades at like, the all-time high is $610 a share, and it's trading at $70. So obviously it's not doing too well when you're like 85% underneath all-time highs. And it's the same way with Deutsche Bank. Deutsche Bank trades at like $7 or $8 a share, and its all-time high was like $90 or $100 a share, that type of thing. It is unique, and understanding what I'm talking about, just discussing it makes you understand how the markets trade, which will make you more money trading and keep you out of trouble, because if you're following false narratives or ideas, thinking that markets are governed by issues that don't really govern them anymore, it's awful hard, you get in trouble investing in that fashion. So, all right, where do we go from here? There's the gold. What is gold doing? Gold's lifting up again today. Okay, you can see that right there. Showing some strength. We're showing some volatility stuff. We're trying to get back into the daily buy since going into the sell up in here. We are still in that weekly buy. You can see that right there. It does not want to give up. And let's check out. I know it is. We need to jump back to the other currencies. Let's do that. Let's jump back to the South African Rand, and we'll just shift this, and then we'll come back. If we have time, we'll look at the metals complex. And let's go find the South African Rand also there it is, on the J4X. And there you go, there's South African Rand. It's been moving down nicely. Boy, is it joining in well with the gold, It's been moving down. Maybe the Zuma situation's all over with. It's been a daily sell since here, and a weekly sell since here. And as I always say to traders when they say, so what's that mean? I said, well, what it means is that at this point in time and space, it told us that this object was going to go down in value, like that. That's what it meant. Nothing magical. Well, maybe it is magical, but in the end result, just like when it told us that it wanted to go up in value at this point in space. And what did it do? It went up in value. So that's where we are on that. Now, let's drift over to the ruble. I saw the ruble breaking through the zero line and heading into the daily sell. And there is the ruble. And then we'll move that, we'll put it up there on Chicago at the same time. And there's the ruble, just flirting with that little sell right there. But it's been in a weekly sell now since, right here, in this area right there. And it's not really, it's not doing anything in particular. It goes down, it goes up, it goes down, and trying to go up. It's lower obviously than where it started from, but it had made a challenge up in here. And then we drift over to the yen. Take a look at the Japanese yen against the dollar right there. And you can see the hinky here on the ruble trying to move down also. We'll find it right there. There's the yen. And the yen is moving down, which means usually the dollar is losing value. And you can see here it's trying to pierce the sell after a few days. But it's been in the weekly sell since up in here, this closing week right here. It went into the weekly sell there, so it goes down, it goes up, it goes down, it goes up. You know, it's basically cruising along, circling the number. And it doesn't seem to be able to get into the buy. You can see here, there was a good launch on the weekly back in here, and then sure enough, you know, you get your strength right there. See, head of days. That's the way it works, traders. 47! What's happening? Have I looked at... I look at everything half a dozen times, so I gladly look at the euro. Let me go look for it. Okay. Let's take a look at the euro. Right there. There's the euro. It tried to perk up. We widen that out for you. At one point, we were almost flat again. Oh, you can see that, another little uptick. You can see we're still in the weekly buy from back here, and it has been gliding up. We broke across the time manifold, so this thing possibly could get more legs on the upside here. We'll see. Over on the fact check spreadsheet, you can see where are we? That's line what, 14, right? So we are 2 full weeks in a buy and 2 days in a sell, and maybe tomorrow it'll get into a buy or something like that and go from there. How's that? 47 all right? And if you want to see anything else, let me know. We'll go take a look at it. You know me. I'm always ready to go check out stuff. Where was I at? I will drift along until you come up with the next product to look at. Oh, I know. It was the Mexican peso. Someone referred to it as being devalued this morning. I found that to be odd. It's in such a nice tight range. You know, it's in that weekly sell right there. You know, it's drifting again down this week. You know, we went into the daily sell here. And where's that? Daily sell right there, and has stayed in that daily sell. I wonder if the next shoe drops, especially with the two volatility signals right back to back. We get another slam doodle, that type of thing. No problem. Gbp Jpy. Yeah, I actually threw that up earlier today too myself, because I'm curious now, because you've been asking about it and I'd like to watch it. I threw the green line in there today for it. I looked at it earlier. See that? Went into a sell 2 days ago. We're still in that long weekly sell of this product. You know, we went into the weekly sell in the where is that? In the 155-ish area, and we've traded it down as low as what, 148-ish area, and now we've bounced back up to the 152-ish area. You can see the daily is trying to lift. I like the gaps between the weekly, the daily signals. It seems to have some continuity. It can be 2, 3, 4, 5, 6 days in a trend on a daily, which is nice. That co-matches really nice with the weekly combination, you know. And so you can see here we are flirting with after that last buy we had here. See, we're in a sell though. Overall, let's widen this out here. We're in a weekly sell now for a while. So, I mean, what's that? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, going on a 13th week of weekly sell from the 155.5 area. So, or 155's area. So, basically, this product seems to be just oscillating along the path. You know, it's been in a daily buy for a couple of weeks. So it kept you out of trouble. In other words, this winner chicken dinner one here, where's it at? Right there. You see that? Yeah. The winner chicken dinner here, where you go into a daily sell and it goes down, and you're in a weekly sell, so you're able to be short in every fashion you want to be. Binaries, options, hard delta, spot, you name it, you can be short it. And then it goes back into the buy. With good money management, you kept most of those profits, if not all those profits, And then, you know, it tells you not to be short from here. And you're in a neutral now. You're not short, you're not long, you're just neutral. And it doesn't go up a lot. And then this goes into a self there. It's a little teeny weeny little win. And then today it was doing fine. It made new lows here. And then Christine Lagarde came out with the front running action and so forth. And that's how that goes, you know. Let's see. Oh, I'm sorry. I just realized that. There we go. There we go. So that's the action we're seeing there. Is that the I would imagine, we'll see. I'm not totally convinced that the tapering news will carry forward to the end of the day. We'll see. It all comes down to the Federal Reserve and the central banks, what they want. I think they are getting beat up a little bit verbally, and I think that they don't really like the idea of looking like they are keeping their fat thumb down on the scale, you know. And so I would imagine they may let this play like this for a while, and then by the end of the day they may let it drift back down into its natural trend, which, you know, we know here the natural trend is the weekly. And, you know, it's trying to be down more than it's up. So I would look at it that way. I mean, that's where my head's at. All right, anything else you'd like to see? If not, Doc's going to go get ready to start trading. Indeed, indeed. So, what else can we say about this? I know it. Did you see the Canadian and gold? We took a look at that. That was very interesting. We're going to call that the title of this, too. That's what we're going to title today. So it's going to be QE, Canadian, and gold. Oh, and was it Passion is doing anybody paying attention right now live, Passion's doing something on cryptos. So tune into that. I'm sure that's going to be interesting. I'm going to try to tune into it. Let's see, where are we? Thursday. Is that it? Right there? Okay, there it is. Yeah, so that should be very interesting because cryptos, you know, it's very interesting to see how that all plays out with the... I'm myself, you know, I'm a big crypto fan. I think that as long as there's quantitative easing, there's going to be cryptos. And I would assume QE is going to go on for like another 40 or 50 years. So, you know, it's going to be like the Great Depression, this situation. Like that. There we go. So anyway, let's see. What your opinion on the crypto right now? You mean like today? I can tell you. We can take a quick look. Let's see. And there we are. Let's go take a look at that. Where are we at here? We've been in a daily sell for 4 or 5 days, I think it is, in the cryptos. So, you know, we caught the sell-off. The math caught that. Let's see if we can show you that. But I'm always a fan of the cryptos. I you know, as long as there's quantitative easing, there's going to be cryptos, as far as I'm concerned. It just has to be an alternative. As much as the central banks hate it, or the media hates it, or whoever hates it, you know. Let's see, there's September right there. And so we've been in a daily sell since here. See that there? And then we got the nice pop and then the slam. You can see today it's trying to give us a volatility signal. Don't be surprised that, oh, it's also dropped below the weekly too. You can see that there. So we've dropped below the weekly. We've been in a weekly buy in that thing for like 5 weeks or something like that, 7 weeks. But you can see there, it's playing with the sell now. What is that? Yeah, 6 weeks. We've been in a weekly buy for 6 weeks. So I'm assuming that if it closes in the weekly sell, it'll go sideways. You know, I don't see anything particular jumping out at me at the moment. Just that I like the cryptos in general, because I think that as long as there's QE, there's going to be cryptos. So, all right, traders. I hope that answered your question there. And you can see here on the math, it's trying to move down. So, Doc from North America in the nursing home. Happy trails